Good afternoon, everybody. Thanks for joining today. Here's a topic that I'm really excited to talk about. During our client meetings, we always want to be looking towards the future, right? So as investment advisors, as investment planners, we always want to be looking out not just over the next year, but over the next 3 to 5 years. And we've had some wild things happen just over the course of this last, I would say, week or so. We had the president of the United States contracting COVID. He seems to be recovering and doing fine now. We've got the presidential debates later today, followed by the vice presidential debates later today, followed by the presidential debates a week after, and the upcoming election only about under 30 days away from where we're at today. And why I wanted to kind of transition the idea and focus on the next technological revolution, it's because our firm truly does believe that technology and innovation transcend any kind of crisis or presidential election. And it's easy to get caught up in what may happen from a policy standpoint or what may not happen from a policy standpoint. But regardless of those facts, we still believe that technological revolutions transcend those. So we hope we can deliver that message today and give you a little bit better understanding of our investment philosophy and why we invest in some of the companies that we do. So I'm going to begin by going over, innovation in the next technological revolution. So we really do truly believe that innovation is one of the most powerful forces in the global economy, and it accelerates and it drives acceleration in the rates of change. We also believe that innovation triumphs over economic volatility as well as recessions, and that innovation creates change and investment opportunities, determining who wins and who loses in this global marketplace. And then finally, it's our opinion that we are at the beginning of the next new technological revolution that will drive unprecedented change over the next few decades. So while productivity propels the economy, innovation drives productivity. So what this chart looks at is the technological progress and how powerful of an engine it can be to exponential growth, right? So on the numbers on the left review the hours of light from 1 hour of work, and the numbers on the bottom is the years of technological progression. So if you look back to the 1800s, you had very little hours of light from 1 hour of work when we were using the candle. It slowly started to accelerate when we went into the kerosene lamp, then the incandescent light bulb, thanks to Nikola Tesla and Thomas Edison. And now we have the LED bulb. And you can just see that technological progress is a powerful engine of exponential growth as well as productivity. And these advances occur at an exponential rate, which means that the rate of change is also accelerating, creating a potent engine to drive the economy forward. So think about when IBM came out with the tabulator back in the 1915, and then eventually developed the vacuum tube with the IBM 650, and then into the transistor, and now into what we call the integrated circuit, which is really propelled by Intel Core i7. That happened back in 2015. And this is all getting back to how the progress is exponential as technology evolves, and that innovation in itself is the most powerful force in the economy. And that growth, that exponential growth, is extremely potent, right? Exponential trends imply that cheap computational power could approach that of the human brain potentially within the next 30 years. And I know that's kind of something wild to really comprehend, but the processing power of some of these some of these integrated circuits are becoming so fast that it is our prediction that within the next 30 years, they will have the same computing power as the human brain, which is also going to increase the processing speed as well as increase the innovation and the technological revolution. Now, to get to that point of the most powerful force in the economy being innovation, exponential growth drives an accelerating rate of change. We said that earlier. And newer innovations that come out are diffusing through society faster. So if we think about how long, and what that chart looks at is basically the different innovations that came out since the 1700s to back to 2007 when the smartphone came out, and how many years it took those innovations to have a market entry to 50% penetration, meaning 50% of the overall market is using those devices or using this technological evolution technology. So if you look back at the 1700s, the postal system, it took almost 250 years for the postal system to reach 50% penetration. Compare that to the smartphone, which came out in 2007. That only took about 4 or 5 years for the smartphone to enter 50% penetration. And, I grew up a Warren Buffett student. I studied value investing at the early part of my career. And in reality, the marketplace has really changed from value to growth. And the reason is because growth stocks within themselves, as long as you are allocated properly, should benefit from innovation, while value stocks that appear cheap may simply be victims of change. So think of a company like a General Mills, right, where they didn't really innovate enough to stay with the current changes of diet and nutrition that really has transformed the economies of the world, at least the developed worlds, over the last 15 or 20 years, instead of just making, sugared cereal. And there's nothing wrong with sugared cereal. I'm a big fan of it. But that is one example where value stocks that appear cheap may simply be victims of change, while growth-oriented stocks that are investing in innovation are continuing to move at a faster pace. This is something that I really like to point out because the adoption of technology is also becoming faster. And what COVID will do at a minimum, COVID has accelerated the adoption of technological platforms at a pace that we've never seen in history before. So if you think about it, you've got 80-year-old men and women that are using Instacart to get their groceries delivered that probably would have never entered that platform in their entire life. You've got 70-year-old men and women that are utilizing Zoom, much like a number of people on today's call. This is with regards to business, but a lot of them are using it to talk to family members or grandchildren because they can't go out and see them. And what I'll point out in the next few slides is that we never go backwards. We only continue to progress. So as the digital revolution rages on, there's huge markets open faster than ever before, and the disruption can happen more quickly. So if you think about Microsoft Windows, which was released in 1985, it took 26 years for them to reach 1 billion users. If you think about Google Search, which came out in 1998, it took 12 years for them to reach 1 billion users. Fast forward to the infamous TikTok application, which I still have not become proficient in, and nor am I a user. But TikTok came out in 2016, and it only took them 3 years to reach 1 billion users. And the point of this being, whether it's TikTok, whether it's Instagram, whether it's Zoom even, those technological innovations are now being adopted at a much faster pace, as you can see from these charts. And in our professional opinion, innovation continues to flourish even when the economy languishes. So if you look at automobile ownership, those advanced in the Great Depression, and there was significant growth in PCs and smartphones during the challenging economic periods that I've shown below. So if you look at the chart on the left, we basically look at real GDP, which is up 4% from 1988 to 1992. But the US PC index grew by 43%, despite that recession that happened in 1990. Fast forward to late 2006 to 2010, global real GDP grew by about 9% during that period of time, but global smartphone subscriber index grew by about 335%, despite the recession in 2008. And these growth fundamentals have done well in difficult economic conditions. So innovative industries such as e-commerce, right? So that would be where you go online and purchase things online, and internet advertising, that could be companies like social media companies, both grew over 30% during the recent financial crisis, despite there being US retail sales being slightly sluggish, to say the least, and underperforming during that period of time, which is that green line below. So this is proof that growth fundamentals and innovations continue to flourish during, laggish economic activity, which is why you want to be a part of those for the long term, with our typical client being retired, about 20 to 25 years at minimum. The world is going to be a completely different place in the next 20 to 25 years. And we want to make sure that our clients are well positioned to take advantage of those opportunities. So here's a history of creative destruction. So if anybody didn't know this, I come from the Huff bloodline. So my uncle's last name is Huff. My bloodline on my grandparents' side, last name is Huff, and they own the Huff buggy. They were probably pretty upset when Henry Ford came out with the Model T, but that is all part of creative destruction that happens during innovation. So you can see the losers on the left and the winners on the right, whether it's telegraphs versus telephones, whether it's horse and mules or cars and tractors, aluminum versus plastic, trains and ocean liners versus airplanes, or even newspapers and online advertising, right? A newspaper, how they made their revenue was selling ad space in the newspaper, and they would incorporate different stories and opinions to drive readers to those newspapers. But how they stayed open was advertising. Well, online advertising, whether that's the Wall Street Journal going digital, has really crushed that portion of that industry, for better or for worse, but there's always losers for every winner that we have. So the last one would be brick and mortar stores versus e-commerce. And you can see that there's a history of creative destruction. So just thinking that these new technological revolutions and what the downfall is in the short term, think of all the millions and millions and millions of jobs that have been created in the e-commerce space over the last 10 years, despite having some of those destructions in the brick and mortar stores. So like I said just previously, there's always going to be winners and losers. And studies show that powerful innovation is associated with growth outperforming value. So if you look at over the past 15 years, innovative, typically sometimes more expensive companies have outperformed cheaper, less innovative businesses. So whether that's commercial printing, paper products, publishing, or department stores, compared to internet retail, application software, biotechnology, video games, or semiconductor equipment, the reason why they are continuously innovating is because it is driving growth. And studies have shown, and our research, like what we've shown has demonstrated, is that most innovative companies grow their sales, their earnings, and their stock prices faster. So this basically looks at a cumulative outperformance over the last 10 years of some of the most innovative companies. They typically outperform by somewhere around 4.5% a year. To the least innovative companies, where they're underperforming just the index by about 4% per year. Why is that? Because investors want to pay for the future. A stock within itself is a vehicle of future earnings. So what do? We have to make sure that those companies that we're investing in are producing returns and growing sales and growing earnings for the future. And Whalen Financial's emphasis on innovation, which we measured by research and development expenditures, how much companies are spending on research and development relative to their sales, holds true across some of the portfolios that we invest in. But the lens of innovation, right? So innovation creates investment opportunities, and the lens of innovation offers a different view of the investment landscape. So we believe that many investors are sometimes, and this gets to where we're at today, sometimes they're too focused on cyclical factors, such as, what is the Fed or central bank policies doing? What is the current state of economic growth? What kind of policies will this president or this candidate or this Congress implement to affect change in economic activity? But in our view, like I stated earlier, innovation is a bigger driver of real economic prosperity and market value than any of those other previous cyclical factors could ever even make change for the overall economic activity. So the traditional lens was quantifiable criteria or characteristics. Well, the lens of innovation happens to be dramatic change and where's the opportunity. Another traditional lens would have been economic or market cycle outlook, where the lens of innovation starts to focus on the view of industry evolution. And lastly, a traditional lens that typically a lot of people focus on is a reversion to the mean or continued historical growth, right? So think about a company like General Electric, where everyone just thought that they would continue that historical growth in the industrial complex, and they would acquire more and more industrial companies and become this big juggernaut of industrial power. But what they lacked was proper innovation and investing, or what the impacts of disruptive innovation would do to their companies. So in our opinion, that lens of innovation is a force that transcends crises and calamities and driving technological advancement forward at a powerful exponential rate. And those are the companies that we really want to focus on, because we know we have to meet with clients, not just next month or next week or next year, but over the next 3, 5, and 10 years at a minimum. And we want to make sure that their portfolios are positioned to take advantage of these evolutionary changes in society, as well as the innovation that is required to deliver those changes. So let's now go into what we call the next technological revolution. And before we get into that, we are going to look at, how a technological revolution really starts, what that process looks like. And what research has shown us is that there is a general structure to technological revolutions. And this occurs continuously about every half of a century. And that life cycle starts with eruption, then a frenzy, and then there happens to be somewhere in between. That's all during the installation period, right? Then there's a turning point into more of a synergy into society. And then the deployment period is where it starts to mature. And then obviously another 50 or so years later, you have what we call another big bang that happens. So if you look at technological revolutions and they've had significant changes to the economy. So global technological revolutions shape our lives, right? So think back to 1771, which was a period of the Industrial Revolution. So some of the innovations that came out of the Industrial Revolution were machinery, mechanization, and it helped by water power, right? And the impact was the textile industry flourished. Some of the first factories came about. Then came the 1800s, or 1829 specifically, which was the age of steam and railroads, right? Iron and coal mining, the steam engine. Well, the impact there was the railroad industry stemmed, introduction of steam power for many industries as well, and the ease of transportation across continental areas so that they could get products to different portions of not only this country, but also around the world, much more efficiently and faster. Then came the late 1800s, or more particularly 1875, which was the age of steel and electricity. So we were able to develop cheap steel, and we electrified the entire United States. Well, the impact there was bridges and tunnels, easier to cross over a body of water than, or go under a body of water than go around it, wait for a boat and take it to it, made us more productive. Electrical networks that then led to things like the telephone, lighting up individual places, increasing people's productivity so they could work longer or spend more time in a more productive manner. Then the early 1900s came around. 1908 specifically was the age of oil and the automobile, and what led to mass production of goods. So innovations during the early 1900s were the internal combustion engine and petrochemicals. Well, the impact there was automobiles, roads, and airplanes, right? And you can think of how big of an impact that was on society, being able to get places a lot more convenient, a lot faster, and what that did to shape the overall economy that was changing. Then the 1970s came, which is kind of the period that we've been in over the last 50 or so years. And that is the age of information and telecommunications. it wasn't just enough to be able to, hop in a car and then go and see someone extremely quick. We now had to, communicate a lot better and get it done faster. So what happened was the integrated circuit as well as the internet. Well, the impact there was worldwide telecommunications network. We can now communicate a lot more efficiently, obtain data a lot more efficiently all around the world, better than we ever had before. And now today, we think that we are just now beginning the early stages of what we call connected intelligence. So the innovations that have come so far is artificial intelligence as well as the Internet of Things. And the impact is still, it remains to be seen what the large impact is going to be. But as you can see previously, about every 50 years or so, we see these technological revolutions, and we think the connected intelligence is that next technological revolution. Again, we believe we are in the eruptive phase of this new revolution, that beginning phase where we're at there on the left. The age of connected intelligence, when intelligent computing will be ubiquitous and pervasive. So disruption is pervasive throughout many sectors, from technology to sectors like energy. And our analysis shows that 31% of the S&P 500 potentially being disrupted by only about 14% of companies in the index. So if you want to do the math on that, that means about $7.6 trillion worth of companies is going to be disrupted by about $3.3 trillion worth of companies. And you're already starting to see that now with large e-commerce companies, as well as social companies, as well as technology companies that are really either forcing people to change their business model and catch up or be left in the dust. And the next technological revolution, which, like I said, we're calling it the age of connected intelligence, starts with the Internet of Things. Right? So the physical world is becoming more and more connected, kind of like what I said. We live in a digital landscape economy, and there are estimated to be more internet connected devices than people in the world right now. Connected devices are expected to grow over 30% per year during 2016, or they grew 30% per year from 2016 to 2020, and expected to grow by from 30 to 36. Or another 6 billion connected devices just from this year till the end of next year, as you can see. So global connection through global connectivity on connected devices. Then we see not only the Internet of Things, but also big data. If more people are connected, then that means we have to sort through that data in some way. So internet traffic is estimated to grow by 24% from 2016 to 2021. And each minute, there are about 3.8 million Google. So just listen to this for a second. Every single minute, there are 3.8 million Google searches, 4.5 million YouTube video views, 390,000 apps downloaded, 188 million emails sent, 18 million text messages sent, and 2 million snaps created on Snapchat. That is every single minute. And you can kind of see this trajectory of global internet traffic. And as companies like Starlink start to send more satellites into space to connect a global web of internet connectivity, this is only going to continue to accelerate that pace of growth. So Internet of Things, big data. Well, you have to be able to store and sort through that big data some way, which leads to cloud computing. And cloud computing optimizes IT assets and allows for easier updating and better accessibility at a reduced cost and improving flexibility. So just here at Whalen Financial, we use cloud computing to store clients' files in an encrypted way. Before we had to actually have, and I know a number of people that are listening to this, remember those large filing cabinets and those big, thick green folders that we used to have and store client files in. Well, now everything can be done in the cloud. Not just that, but also all of our software and our ability to manage and make trades and investments, all done within the cloud or backed up in the cloud. And the fast growth of cloud computing enables big data to be more easily analyzed. Now, the second to last part of this technological revolution, or the age of connected intelligence, which we think is going to be the largest contributor, is going to be artificial intelligence. And Moore's law, the doubling of transistors on a microchip every 2 years, has been the driving force of the global digital revolution. Now, a new exponential law for artificial intelligence is set to usher in an even larger, more powerful changes in technology and living standards. And this chart on the bottom basically follows the AI program training doubling every 3 to 5 months. So this new technology that's going to be able to not only analyze data at a much smarter pace, but also help us perform functions at a much higher productivity level is doubling at a pace of every 3 to 5 months. And that trend is only going to continue, which is why we think the AI revolution is progressing very, very quickly. And one of those 5 cornerstones of this new connected age revolution. And then obviously there's variable insights, right? So companies are already harnessing this data and implementing change. So let's look at agriculture first, right? The digital transformation of agriculture is, how can we optimize crop yields based on weather and yield patterns? Well, what's the benefit of that? Higher crop yields. Let's look at transportation, self-driving cars and trucks. Well, what's the potential benefit of self-driving cars and trucks? Disruption of traditional transportation models and potentially lower shipping costs in the future. And then lastly, which we think is one of the biggest portions, is healthcare. And machine learning on disease patterns for earlier or more accurate disease recognition can lead to better patient outcomes and, at the end of the day, potentially lower treatment cost if we can understand it and treat it earlier versus waiting to the worst case scenario and only having one of the most expensive options to do so. And that kind of gets back to genetics, right? On healthcare, where we think genetics is going to be a big driver in the future. If you think about the cost of DNA sequencing just 19 years ago, if you were going to sequence your genes to learn more about your genetic code, it costs close to about $100 million. Well, just in 19 years, that cost is now down to almost about $1,000. And what we're predicting is that long-term target cost is going to be somewhere, $100 or less within the next, 10 or 15 years. And instead of treating disease with a one-size-fits-all approach, now with genetic coding, we can have more personalized therapies that are often more effective and potentially have fewer side effects. And these advances are already helping fight diseases such as cystic fibrosis, hepatitis C, as well as some forms of cancer, which is going to only continuously drive that innovation forward. So in summary of today's Whalen University class on the next technological revolution, we believe we are currently in the age of connected intelligence. Remember, these technological revolutions only happen every 50 years or so. So we think we're in the early eruptive stage of this new technological revolution that's potentially going to be carrying us for the next 50 years. And we believe that innovation is the most powerful force in the global economy. And we also believe that innovation triumphs over any kind of economic volatility or any recession as we looked in the past. Now, those recessions or those volatility moments make our stomachs feel uneasy, but you have to remember that a stock within itself is a vehicle of future earnings. So we have to wait for the future, which is why we position clients the way we do. Second to last, innovation creates change and investment opportunities and determining who wins and who loses in this global marketplace. So we want to make sure that when we're selecting companies to invest in, that we are investing in those companies that are driving that change instead of just sitting there cheap value, because sometimes they deserve that cheap value. And lastly, we are at the beginning of the new technological revolution that, in our opinion, will drive unprecedented changes over the next few decades. And in spaces like the Internet of Things, in connected devices, in big data, in cloud computing, in artificial technology or artificial intelligence, and all of those will impact variable insights of different industries and different sectors. So with that, I really do want to thank everybody for joining us today. It will go up on our YouTube page. You can go to YouTube and just search Whalen Financial, click on our page. This should be uploaded within the next few days. I hope you enjoyed it. We are Whalen Financial, building your tomorrow together. today. Give us a call, 866-600-3030, or send us an email, info@whalenfinancial.com. Have a great day, everybody. Thanks again.